Greetings, everybody. Happy Tuesday. It is May 16th, 2023. Hope everybody's having a fantastical day out there. I am Raymond Dahlman, your humble host here at the Liberty Call. How are my fellow Liberty lovers doing out there? Please give me some big old thumbs up, like, share, subscribes, follows, all that good stuff. I would greatly appreciate it. And not a good day in the markets. I'm looking at the screen right now. I see tons of red. Here domestically, I'm sure everyone's aware of that. But around the globe, a lot of red. I'm not sure. I mean, again, knowing the big picture of everything that's going on right now, it's really not surprising. I mean, you got a slow, the economies are slowing around the world, especially here in the United States. And, you got all sorts of political issues. I primarily pay attention to this stuff domestically. The Durham report came out yesterday. Everybody, I'm not going to go into that. If you want to talk politics, give me a call. I'd love to. I love talking politics too, but that's not my wheelhouse here. So anyways, let's go ahead and jump into the numbers and see how they turned out for today. The Dow Jones was down 1.01%, 336 points, closed at 33,012. S&P 500 was down 0.63%, closed at 4110. NASDAQ was down 0.18%. It was actually in the green most of the day. The tech was the only thing holding up the market for most of the day. It was down 0.18%, closed at 12,343. The VIX was up 5.08% today. It's at 1799 right now. Canada was down 1.45%. Brazil was down 0.77%, and Mexico was down 0.14%. Headed over to Europe, Germany was down 0.12%. UK was down 0.34%. France was down 0.16%. Netherlands was one of the few bright spots. It was flat at up 0.01%. Spain was down 0.11%. Italy down 0.17%. Switzerland down 0.5%, and Portugal up 0.31%. Russian exchanges were split. MOEX was up 0.87%. RTSI down 0.62%. And the overnights in Asia, starting out with the Nikkei in Japan, it was up 0.73% last night. Australia was down 0.45%. New Zealand was down 0.23%. In China, the Shanghai was down 0.6%. The Shenzhen component down 0.71%. China A50 down 0.39%. DJ Shanghai down 0.57%. Hang Seng flat at up 0.04%. And the Taiwan weighted was up 1.28% for the day. All right. So like I said, mostly reds, a few bright spots here and there. But for the most part, again, my personal feeling is that, investors, traders, whatever you want to call it, especially the people who know what the market's doing, are kind of just sitting on their hands right now. It's kind of like what I'm doing. I've got a ton of money, of my clients' money just sitting in cash right now, just waiting for things to fall apart and bottom out, or give us some signs that we're going to, this is the bottom. Which again, I don't necessarily think is the case right now. But I think a lot of people are just kind of sitting on their hands, waiting to see which way it goes. I know there was some articles I was reading yesterday that what's his name? Michael Burry, the guy that the movie The Big Short was about. I guess in his disclosures for the purchases he had made, he bought a bunch of regional bank stocks in the first quarter, and they're pointing fingers and laughing at him, saying, look, he made a bunch of bad bets, but he may have actually been closing out his short positions. And if he bought if he'd shorted a bunch of those regional banks a few months ago, and then had to close out those positions, that's probably why he was buying those holdings to close out the shorts. So he probably made some money on it. Again, I don't know what he did, but that would be my best guess as someone who does this for a living. So, all right, let's go ahead and jump on over to today's market recap. S&P 500 slips pressured by energy. Retailers stumble on Home Depot dip. Get my notes up here so I don't sound like an idiot. Do I? All right. On Tuesday, the S&P 500 experienced a decline due to a slump in energy stocks and disappointing quarterly results from Home Depot, which affected the retail sector. Home Depot's quarterly results fell short of Wall Street expectations due to lower lumber prices and a slower start to the spring season. Now, if you do remember, lumber prices were like through the roof. What's that? 2-3 years ago when all this madness was getting started. So Yeah, they probably bought a lot of this lumber at higher prices and are now, because prices have stabilized, and normalized, but at the time, you got to think 2-3 years ago, all that lumber sitting in their yards, I mean, that had already been cut down, a long time ago, and they were selling it at massive profit. So in the end, it all kind of, evens out, through the highs and lows of whatever commodity that you're buying and selling. But, in the end, it all works out. But I mean, right now, it makes their numbers look bad. All right. This led Wedbush to view the results negatively and anticipate a negative impact on other home-oriented retailers like Lowe's. As a result, the broader retail sector declined more than 1% during the day. Retail sentiment was further affected by data revealing that U.S. retail sales fell in April. Fell short of expectations, indicating weakening consumer strength. Jeffries noted that the sales were constrained by weak gasoline station sales, which was surprising given the rise in pump prices during the month. The energy sector also weighed on the market as weaker than expected Chinese economic data overshadowed expectations of increased energy demand. Despite the International Energy Agency raising its global oil demand forecast, stocks like Valero Energy, Halliburton, and Targa Resources experienced notable declines. However, technology stocks resumed their upper momentum, led by Google and Microsoft. Microsoft was boosted by progress in its $69 billion deal to acquire Activision. I am not sure why my printer is spooling right now. I didn't touch anything. To acquire Activision Blizzard as the European Union approved the deal, which also serves as an incremental positive for Microsoft's appeal against the UK competition watchdog's decision to block the deal. I mean, are either of these countries in the UK? I mean, that I don't know. I guess if either of these companies are chartered or whatever in that country, I guess they might have a say. But if not, who cares? All right. Financials continued to drag on the overall market, but Capital One's 2% climb helped mitigate the losses. This was driven by news that Warren Buffett's Berkshire Hathaway took a nearly $1 billion position in the company. The market was also affected by U.S. Treasury Secretary Janet Yellen, dumbest human I've ever seen. Yellen's reaffirmation that the U.S. could face default by June 1st if Congress fails to reach a deal to raise the debt ceiling. President Joe Biden and congressional leaders plan to meet on Tuesday to discuss finding a resolution to lift the $31.4 trillion debt ceiling of the U.S. government. Yeah, instead of spending less, I mean, again, if a couple came into my office and sat in those chairs right across from me, although I don't know if they'd be a long drive out to where I live. Most of my meetings are done through virtual webcasts. But anyways, if they were sitting here and we were going over their numbers and they're saying, yeah, we make $150,000 a year, but we've got, 30 times that or 10 times that in debt. So we'll say $100,000 a year, and they got 10 times that. So they got $1 million in debt, all credit cards. There's no equity in any of this stuff, or they don't have, there's no assets attached to the debt. So they got $1 million in debt. They make $100,000 a year. And, then, I want to live, I want to retire early and I want to do all this stuff. It'd be like, okay, first of all, we got to deal with this massive pile of debt first before we accomplish anything, because you're going to be servicing this debt the rest of your life. So, is bankruptcy something you need to do? I don't know. I'm not an attorney, but, these are the things that we would talk through. All right. Anyways, but hey, let's just borrow more money. That solves all the problems. Dollar gains after U.S. retail sales, debt ceiling in focus. So let's see what this has to say. On Tuesday, the U.S. dollar strengthened as retail sales for April came in lower than expected, but indicated a solid underlying trend. While concerns about the debt ceiling issue persisted, U.S. President Joe Biden and House Representatives Kevin McCarthy were scheduled to meet today to talk about raising the debt ceiling. All right. Investors anticipated that the debt ceiling issue would be pushed closer to the deadline, keeping the market range bound. The dollar index rose 0.2% to 102.59, and against the yen, it climbed 0.4% to 136.62. The euro slipped 0.1% against the dollar to 108.65, while the pound fell 0.3% to $1.24 or 24.9 cents. Earlier, the dollar had gained strength after U.S. retail sales in April fell short of expectations. However, the underlying trend suggests that consumer spending remained robust at the beginning of the second quarter. Retail sales increased 0.4% in April, with March data revised slightly lower. The positive trend in consumer spending was supported by a 1% rise in industrial production in April, surpassing expectations and indicating further economic strength. The reports indicated that although the market expects the Federal Reserve deposits rate hikes in the next meeting, the possibility of an increase in borrowing costs was not ruled out. The rates futures market reflected increased odds of a 25 basis point rate hike next month, rising to about 22%. Several Federal Reserve officials, including Richmond Federal Reserve President Thomas Barkin, have emphasized the need for potentially raising interest rates further if necessary to curb inflation. Despite some mixed signals in the data reports, most indicators were favorable, leading economists to track potential upside risks to first quarter GDP growth projections. However, given the prevailing uncertainty surrounding the debt ceiling issue, JP Morgan's chief U.S. economist Michael Feroli expects the Federal Reserve to maintain its current stance and keep rates on hold at the next meeting in mid-June. The overall economic outlook remains positive, but concerns around the looming debt ceiling and inflation dynamics continue to influence market sentiment and the future trajectory of interest rates. So, good news, bad news. Dollar's going up. I was wondering why gold was falling, and then I saw that the dollar was strengthening, and they kind of have an inverse relationship. Alrighty then. Last up, article from the Mises Institute, Mises Wire, written by John Kennedy, not the senator or the president. It's titled "The Failure of Public Works and Public Funding." So I know there's a lot of people out there who, it's a public good. It's got all these positive things, and building bridges and rockets and all, military and all that good stuff. It helps the economy, sort of, if you work for one of those companies. But let's go ahead and read through my summary of this. All right. The cost of living in a civilized society often comes in the form of public works projects that are funded by taxpayers' money through taxation or inflation. This funding is said to be necessary for the development of essential infrastructure projects such as roads, bridges, and public transport. However, according to Henry Hazlitt's book, Economics in One Lesson, good book, these projects make the country poorer as they take away resources from taxpayers that would have been used to buy or produce things that they need most. For every public job created, a private job has been destroyed elsewhere, leading to an overall decrease in the number of jobs available in the economy. Additionally, politicians often fund projects that are not even necessary or end up being failures, wasting taxpayers' money. 3 examples of such failed projects include Connecticut's Dunkin' Donuts Park, New York City subways, and California's high-speed rail. The Dunkin' Donuts Park was supposed to be completed by April of 2016 for $47 million, but ended up costing $72 million and was completed a year later than expected. The New York City subway system is owned and maintained by the state-owned Metropolitan Transportation Authority, which employs 70,000 people and provides an average salary of $72,029 per year for bus jobs and $86,000 for subway conductors. Man, that's a pretty... Well, you got to live in New York, so it probably doesn't go very far. Draining the New York economy with recurring annual expenses of $2.5 billion more than it takes in. Finally, California's high-speed rail project, which began in 2008, was initially budgeted at $33 million, but by 2018, the cost had doubled to $64 billion, and is now estimated to cost $100 billion. So, good deal there. Private enterprises are more successful than state-run industries because they have to compete with other companies that want their contracts. They must be efficient to stay profitable. Proponents of public works programs claim that private businesses overcharge the poor, and that's the only way to stop this is to have a public system. However, public industries such as the MTA lose money as they pay their workers above market level and have to rely on funding through taxation since fares are not enough. In conclusion, public works projects funded by taxpayers are often wasteful and end up making the country poorer. Private enterprises are more successful than state-run industries because they are more efficient and they have to compete with other companies that may want their contracts. While public works projects may seem necessary, taxpayers need to be more aware of the costs and question whether they are truly needed. And having grown up next to a giant public works project, NASA, JSC in the Houston area. I mean, I could walk to it from my high school and from the house that we lived in before we moved here to Colorado. And again, I grew up there. I thought it was cool that, I went to school with astronauts' kids and, people who worked at mission or their families worked at Mission Control and all the contractors around there. But, as an adult who has a better understanding of economics and how public works is done, the way I look at it is all those engineers and scientists have been pulled away from the private sector where they could be, solving real problems as opposed to, building rockets that don't go anywhere. And, I'm not crapping on those people. I mean, they're very smart. A lot of them are, friends and clients. And, it just seems like a poor use of resources. And plus, it comes out of my pocket. I mean, there's no profit motive there. I mean, whether or not you work for Boeing or Lockheed or back in the old days, Grumman and all the old companies that used to, that had buildings all over Clear Lake where I lived. To me, those people would have been better a better use of their talent and knowledge would have been in the private sector, developing cures for things or, whatever. So anyways, that's everything. That is my soapbox for today. So, anyways, if anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. You see my email? There it is right there. If you want to send me an email, you can go to my website and click on the email me, or if you want to book a meeting, feel free to do so. Otherwise, I'm going to go outside. Oh, there's a deer in my front yard. So I'm going to go out and play with my puppy. It has been raining for days and it's finally starting to dry out. So we're going to go out and chase the ball. Well, I'm not going to chase the ball around. I'm 49 years old. And I'm going to let him run some steam off. And where'd he go? We're going to go out and have some fun. So hope everyone has a wonderful evening. Go watch some Astros baseball. They whooped the Cubs pretty good last night. And I'll talk to you next time. Adios.